everyone for the first panel discussion for the day. The topic is digital transformation. I welcome all the panel members and our viewers. What we'll do is we will first have a quick round of introduction from each of the panel members. I'll request everyone to just introduce yourself with a one-line statement. I'll start off with my introduction. I am Sandeep Sonpatki. I am a partner with Deloitte in our consulting business based out of Mumbai. I'm happy to be here.
Hi, I'm Manish. I've been working in Kotak Mahindra Bank for last 9 years. I handle the digital channels for the bank.
Hi, morning. I am Sunil Soni, CIO of Punjab National Bank, and I've been here with the bank for almost about 34 years now.
Hi, I'm Topendra. I work with RBL Bank. I've been with the bank for about 7 years, and I handle digital banking for the bank.
Hi, this is Vaibhav Joshi. I have recently joined Equitas Small Finance Bank as a Chief Digital Officer.
Hi, this is Sachin Londe from Datameto. We are a technology company. We are into DevOps. The good part is today is my 9th anniversary of Datameto.
Welcome, welcome everyone, and thank you for the quick introduction.
Hi,
Sorry,
Ashish Ahuja. I am the Chief Operations Officer with Fino Payments. Back to you, Sandeep.
Hey, thanks. Sorry. All right, so let's get started with our topic, digital transformation, and this is a word that we've heard for a number of years now, right? With the entire mobile revolution and all of us having a smartphone in our hand, which enables us to access anything and everything from anywhere. And banking is no different, right? Many of you have been pioneers in your own respective fields and respective organizations, helping launch digital transformation for your respective institutions, both across banks and NBFCs. And this digital transformation obviously got accelerated because of COVID, as we've all seen that all of us have been locked in our respective homes and not able to go out and venture out, but still being able to continue our services. And banks obviously was one of the critical services that was identified. But it has led to a lot of changes in ourselves, in the way we are servicing our customers, the way we are thinking about products that can be offered and how can they be delivered, and obviously operating in the marketplace. So I would like to actually start off and understand from some of you as to how has your organization responded to it. And obviously it's been 8 to 10 months now, and there have been a lot of learnings on how you responded. But I would also want you to talk about more from a futuristic perspective as to what has it meant for you from a products perspective. What products have you brought about? How changes have you brought about? I know some of us may have struggled initially, where we may not have all the products, or the processes themselves may not be geared towards a complete digital. So some of that I think will be helpful for us to touch upon. So let me invite first from the banking side, Mr. Sunil Soni, if you want to share your perspective, how Punjab National Bank has responded to it.
Sure. Thank you, Sandeep. And good morning, all viewers. You see, as a bank, the major most challenge was to see that we remain connected with the people around. And the services which the bank normally offers is the financial and non-financial services. So as long as the non-financial services were concerned, we were still able to, put it across. And since we had the digital channels already up and running in the shape of our applications, so we were able to, pull it along, and we were able to see that at least the essential services are being made available to the customers. However, looking at the financial services, that was a big challenge, because essentially either there were two segments. One is the people who would like to have the financial services or financial transaction done. However, it was difficult for them to come out due to the scare. And on the contrary, there were some who were there with regard to their needs because they were hard pressing and things. So we broke our problems into smaller segments and essentially saw that we reach out to the people at large. Reaching out from a perspective that which are the interiormost locations where people would require services was quantified, and the extended arm of the bank, which is our business correspondents, they reach out to the public at large, do these activities in a very secured and safe manner. However, looking at the facilitation which was required at the bigger cities, people are a little careful in attempting or attending to their financials, and they've been able to come across and reach out to the vending places where the cash would be financed there. That was one way of looking at it. However, the other segment where you say that this was the past, but however, looking at what is the future that holds for us in this, there was an opportunity where we saw that a lot of other products which were kind of either languishing, or they were not gathered momentum to see that essentially the customer requirements, which was primary to our case, is met, and they are in a position to reach out and get their activities done. So, uh, so to say that our digital offerings extended from a perspective that we reach out to customers, which is one is uh, external customers, which is our bread and butter earners, and second is the internal customers, that is our own staff members who had to be reached out to different difficult locations also, so that they can continue to work. So probably these strategies, worked out, and we've been able to sail through ourselves successfully without much casualty and without much hiccups in the overall services.
Thanks, Susan. So also, just a follow-up to that, what you said. See, we also seen a lot of public sector banks have also undertaken the digital transformation initiatives now, right? With the EASE 3.0 norms also announced by the government. So how do you see yourself competing with other private sector banks? Do you think that there is now the necessary momentum and uh, necessary support from the government as well that will equip you to run some of these transformation initiatives and get them and compete with the fintechs and private sector players and others?
Good question, Sandeep. Essentially, what happens is that you are looking at a scenario where uh, there are two ways of looking at this problem. One is whether you've been forced, as you said, the government has now given a pep and you have started working, or alternately, second, or which is the first thing for us was that we had seized it as an opportunity and started working on extending our services. Now, looking at what are the activities that are being done, or the second question to you, second aspect to you, which you said, is with regard to whether uh, it makes sense to compete with the private sector or with the other service providers. So essentially, we are in a business which is competitive. For sure, the competition is always there. However, now in synergizing the things, with the other providers, when I say other providers, it would mean those small-time providers which are fintechs in shape, whether they continue to be there as individuals and continue to extend the services, or they synergize with the bank, extend their reach to the maximum number of people or customers that we have. So each bank had their own strategy towards this. Our bank also had a strategy. So we've kind of synergized with the fintechs. We've also created a situation where, or a place where we are now thrashing out what are the type of products which can be offered to the customer as per the current analysis of the data that we have. And third thing is, while looking at these synergies, we've also created a pool of people who have now gone ahead and uh, created a partnership with various different financial institutions or various different educational institutions, which are now front-ending these fintechs as well. So these are some changes which have been seen over the last 1 year since the pandemic, and bank has actually progressed well in all fronts, so to say.
All right, great. Thank you so much for your views. I'll come to the other two private sector banks now. Topendra and Manish. Would be interesting to hear your views as well. Topendra, you want to go start first?
Sure. Thank you, Sunil. Thank you, Sandeep. Thank you, Sunilji. Sunilji, that gives a good perspective on the public sector piece. Honestly, I mean, that was good to hear. So from RBL Bank's perspective, there were 3, 4 areas. While I think, Sunilji has covered quite a few things that grossly banks would have actually, come up the curve in terms of the advent of the pandemic and therefore higher penetration into digital, higher usage of digital and so on. there were 3-4 areas that we had to quickly pull up our socks and run faster on, while we were already, trudging along well, and we were well placed in the entire digital space otherwise. But there were some things that needed to get organized, because we were living in a scenario where it was more of a hybrid scenario, where what you have mentioned, you had the branch access plus you had digital channels earlier, pre-pandemic.
Mhm.
Now, post-COVID, the scenario changed, where there was a period almost of about 4, 5, 6 months where people never stepped out of their houses at all. While branches were open, they were unable to go out, or they didn't want to step out. So you had to provide for everything in their own premises. That got us a few challenges in space. Okay, one of them was availability of the channels, which was critical, and therefore build the infrastructure accordingly. And because sudden spurt and usage actually created other types of issues in terms of availability. So that was one. Second is, can we increase or work around multiple other new channels? So, for example, WhatsApp banking was something which was very popular, because you know uh, uh, migration onto WhatsApp, or rather onboarding a customer's onboarding on WhatsApp was very simple, and therefore certain basic things were available to him where they were anyways present. So, for example, checking off a balance or figuring out some basic transactions out there is something that could have been done around the WhatsApp space or the bot space per se. Therefore, getting it organized and getting it developed in that period of time was something which was critical. The third thing that we worked on or rather quickly, was on seeing how we can onboard customers without having to meet them. Now, on one side, of course, NPCI supported the entire cause by introducing video KYC at that point of time, and we were one of those first banks to latch onto it. And while we already had a full-fledged account opening process which was available online, so digitally, so customer could anyways come on board through an Aadhaar OTP KYC as well as PAN verification, and they could actually onboard themselves for a savings account. What helped here was to complete the process through the VKYC process, video KYC process, and therefore we give the benefit of certain things like a good fixed deposit rate, a good savings account rate to the customer, completely online, without having had to step out of his secured home per se.
Thanks, Govindu, so much. Wonderful. Manish, you would want to add upon what?
I'll try to attempt what is left. I think Topendra and Mr. Sunil spoke very well. I think Topendra stole all the thunder which I had in my mind to talk about. So nothing much to add. 2-3 perspective. When we pandemic started, we look at already 2 journeys that happened. First thing was to conserve, to protect things. How do I conserve or protect our employees, our partners, and our customers also, right? And all the thing around data security, how to enable people work from home, when branches had to be kept open, or contact center was not difficult to bring so many employees in one place to do it, right? Those things are not working. First thing was doing that. How do we conserve thing? And I think every bank faced humongous challenge there. There are some people without laptops. How do we provision them, set up things there? How do I securitize the customer's data, right? So we realized first was that conserve ourselves. Second, for customers, we realized instead of focusing on launching a new product, a new solution, can we use what is already there? Luckily, I think thanks to so many years of digital work by the bank or by government, everybody, I think a lot of things in India, the tools are available, right?
Infrastructure.
For example, video KYC was there, e-sign is there, all digital based payment is possible in India, right? We could realize that a lot of solutions are there are possible. Loans, obviously, customer wants a loan, but we could not want to give loan because all credit models are gone for toss because of all the changes happening in the industry, right? But we also had a secure loans product available to us. What we did as a bank is the first try to utilize what is already there with us, right? So you already have mobile banking app or WhatsApp banking or net banking. Can I increase usage to the customer? A lot of work went into training the employees, training the relationship managers, all touch points, and that go to customers. In comfort them that your money is safe, your bank is safe, everything is properly. You have option to go to branch. However, if you don't want to go to branch, we can easily get them 85 to 90% of your transactions can happen online, right? Now, with that, we start to say a lot of people who earlier were digital laggards. Like as a bank, as a Kotak Bank, we have high number of ultra HNIs, NRIs, large corporates, and SMEs. I'll say people in smaller towns, people on higher age. So typically in any banking, if anybody will drive adoption, we'll see these are the people who are mostly laggards in terms of digital adoption. However, these are the people who are just not want to go to branch now. The branches are open, right? So we realize now that we started to go back to those customers and try to increase their digital adoption. Plus, whatever products are available with us, we run that. Now, for example, government started moratorium scheme, right? That's slightly complicated scheme because mostly used by SMEs. But there, obviously, you need, say, if me and my partner both have to sign, right? You need to physically sign normally, right? But now using e-sign, we could enable it, right? So that became a game changer. How can I call the customer, convince them, give them details over the phone or a Zoom call? But after that, they are ready, then no need to have physical form, through website, they can upload document, e-sign in and do it, right? So I think a lot of time in India, luckily, it was more about smartly to use what is already there and efficiently make the system run. That was the first phase. The second phase, I'll say, became more on what more you can do now. Because we all got comfortable. We know it's going to run for longer period. People got comfortable. We knew how to handle innovation over the Zoom call, right? So with that, I think we start to look at the new product, new processes, new areas also. Okay, and that has become now, I'll say, a norm for us to do it. However, I think the biggest change we see transformation happens is, see, I feel mostly innovators don't, I will say, innovate the product on its own. Okay, it's customer who finally changes his preferences, right? And then the innovators are the first one to capture the customer, change of behavior, and build a product or business model on it, right? For example, uh, small short videos, right? People share or watch short videos, right? Even if one the video app has got closed, there are hundreds other coming up, and customers are okay with it, right? So it's the customer behavior it has changed, and then somebody has to pick up, right? We realize the video is one place which is actually in that phase now, which can be a game changer.
I would like to ask the panel members on how do they see digital transformation in their organization, and what are the key drivers and key learnings. And I'll ask Sachin to start with that more as someone who's working with banks, and giving a more outside in view on how do they see this journey for banks.
Yes, good. So when you talk about Indian banking, everybody is bankers is aware about that. Here in India, most of the developments outsourced, right? You work with the vendors. Around 70-80% developments outsourced to the vendors, because of the compliance, and they get the deliveries at their end, and they maintain their deliveries at the bank side. So when you talk about digital transformation, I have seen that when I work for the banks, they are really now innovative. Looking at the Indian market, Indian banks are more innovative. The challenge is that when you talk about innovation and digital transformation, how do you make sure that legacy system to be transformed to the completely new era, new digital? Because customer experience is changing, a lot of demand from the business side is coming up. How do you manage that demand, like time to market? There, I have seen that DevOps is one of the methodologies picking up. I know that it's not something widely used in Indian banking, but yes, now there are a few banks which recently started applying the methodology like DevOps. What is talk about DevOps? Typically, a complete digital transformation using the automation piece where you have requirement, then your change management, your deployment, all those things can be managed effectively, and you make sure that your product, your releases, your core banking or your digital banking, your internet banking applications are using the CI/CD platform and deliver on the time. That is something I have seen it. The post-COVID, what I learned it earlier, bank as working as a physical entity, right? An IT department. We as a partner, when we work with the few banks, my staff was actually sitting at the bank premises with large private banks and understanding the requirement. The challenge is that when everything goes remotely, it's a bit tough to understand the requirement from the bank because it's a domain expertise and we need a technology expertise. So that alignment is taking time. But now DevOps is actually giving a lot of entry point to the banks, that how do we capture the requirement in a center way so that you can pass the requirement to the respective your vendors. Because today you have multiple vendors, you're still passing your requirements and getting the delivery, and then you're pushing out the production environment or IoT environment, and then subsequently the giving to the customers benefit. That's something I have seen that DevOps is playing a key part. Now we talk about machine learning, AI, right? All those things is a big buzzword. But how this machine learning and AI part comes? You need a data. For data, you need your domain banking application to pull out the customer data and those unstructured structured data to be presented using the machine learning and AI. So the question is, all those things fine, but how do you manage those application delivery to collect the data? There your DevOps, the CI/CD pipelines comes in the picture.
So in fact, I'll come to Vaibhav and Major Ashish now. So do you hear a lot of these words nowadays in your day-to-day life? DevOps, Agile, how, uh, how do I use more of AI and ML in my products and services? Are you does it resonate with you that you're becoming a more and more tech company now, which have a mindset of a technology services company to come out with using technology to offer products in financial services?
Thanks, Sandeep. That's a very good point. But before that, let me touch upon your previous question of being phygital and what banks are looking at, this new phygital thing. Now, let's understand that a lot of these regulations don't allow the bank to become completely digital. To give you an example, a current account opening, the CPV process needs to be done physically. Okay. So no matter how much you automate a current account, it will always be a combination of a digital and a physical. Okay. In India, with such a variety of demographic, variety of geography, variety of spread, and the variety of customer base we have, with the combination of urban and rural, phygital is something that is going to be here to stay. Okay. If you look at what Sunil Saab was also saying some time back, using the VC network, then today India is around what 40 lakh odd VC agents. What did they do? They do banking in an assisted model, and that is the phygital part of the banking. Okay, you talk about services that Topendra will relate to me. You talk about services like digital payments. We are talking about domestic remittances. We are talking about cash out via AEPS. We are talking about micro ATM. We are talking about Bharat bill payment system. Major Ashish will resonate with me. These are all payment services that I am talking about. This all happens in a phygital model. Finally, yes. So what we did was, yes, we brought in our own, selfie stack, which is a digital only, or a Manish's 811 equivalent kind of a, savings account. We supplemented that with, RD, TD products, which were also digital only, and we started sourcing customers on a digital only model. But having said that, phygital is here to stay. Now, coming to the second point, Sandeep, that you raised, does these technology tech words resonate? Yes, they do resonate. In fact, I truly believe that this is the time when banks don't have to become just the technology processing companies at the back end. This is the time for banks to stand up, to create its own use cases around API banking, around neo banking. Banks need to start understanding what is it that the customer wants, because banks have been rendering products to the customer that they wanted, the way banks want it. Now it's time for the banks to understand what is it that the customer wants. What is it that a fintech is doing different that a bank is able to. The moment bank is able to put fintech shoes, bank will automatically become a fintech, and that is where all these processes will start automating by itself. That would be the true form of digital transformation.
Thanks, Major Ashish.
Yeah, so in my sense, Sandeep, if you're talking of digital transformation, digital leadership from an organizational perspective, the first thing that comes to my mind is it needs to be driven as a culture. You can't take it to be a project-based kind of conversation to say, today morning as senior management, I believe today the digital day of the week and this is going to be a digital month. Because then you're not going to build culture. Then you're going to have one-off projects going and you'll all clap and, it'll be some tick on the box somewhere. For that to be this thing, the messaging top down needs to be very clear that we will, and it needs to be seen that, the senior management or the CEO is not going to accept paper as part of this process. Easier said than done, because large banks carry legacies and there are regulations around it. But where possible, you need to be very sure that I will avoid a piece of paper in the conversation or the customer journey as far as possible, within the realms of, naturally, within the constraints of the law or regulation, right? Along with that, it is, I would say, when we talk, because we've gone through a particular journey ourselves as an organization, when we did RPAs, we've done bots. It's very nice to have all these conversations, but along with that, one needs to be very clear in all these journeys that please be ready to fail, please be ready to award or reward failure within your organization, because that is what is going to keep the teams going, to say that if we try out something different, our neck is not going to be on the block 24 by 7, right? Otherwise, people are not going to think differently. They're not going to try and innovate. So that messaging and how you convey that message down the rank and file of your, especially your products and your technology teams, is what is going to come out, is going to be the differentiator when it comes to the transformation piece. Other side is, I would say, pick up projects which are there, built to last, map them with your customer journeys. One size doesn't fit all.
Mhm.
And you've been part of some part of our journey, Sandeep, you wrote for yourself. We coined this term phygital, I think, in 2016, when we were even writing the application to Reserve Bank of India for Fino Payments Bank at that time, and said that a model will be phygital where the access point will be physical, because a customer who earns, let's say, about a lakh to about 8 lakh rupees, which is my core customer base, is not ready for 100% digital transformation. But once he touches my touch point, from there on, the journey will be digital. एंड वो जिद थी कि उसकी जर्नी वहां से डिजिटल होगी, उसके अंदर आई विल नॉट अलाउ सिंगल पीस ऑफ पेपर. एंड दैट इज व्हाट, those journeys need to map your own customer journeys and where you can take it. Our job as an organization from a customer's journey perspective is to ensure that all tools are available. I can't second judge the customer whether he stays in a swanky building in Malabar Hills or he's staying in Manpur, which is the Bharat of India, residing in Bombay, right? Because they are aspirational in their own terms. 80% of my customer base today is on Facebook. 92% of my merchant base is on Facebook, Twitter, LinkedIn, Instagram, Snapchat. Which means if you're socially kind of there on these mediums, you are ready for adoption whenever it suits your convenience. So make sure that your journeys travel that path alongside. Leave choices to the customer and let the customer travel his own journey, is how I would like to put it. Back to you, Sandeep.
Thanks. So I take it that you strongly believe that digital is here to stay in COVID or no COVID. I think as a market, or I don't know, it's a cultural thing, but physical presence would be a critical enabler for us to drive digital solutions.
So if you asking me, I would say my entire business model as a bank is defined by the phygital model. I believe in India, people buy from people. I believe two-way communication, it brings in human warmth, empathy, and for at least segment. And again, I would repeat that, it is not, each segment is different. If I talk to my children today who are probably millennials, they like to be left alone and they don't want any advice from including their parents specifically as to how, because they know it all, right? So they probably would like the digital way 100%. But if I am talking in context of a particular segment, which is, I just defined it for you 2 minutes back, is people from about a lakh to about 8, 9 lakh. They need more than scale. They need the safety, the security, the transparency that whatever you are telling them will happen exactly that. For you and me, a 5,000 rupee transaction going wrong in an ATM means only a couple of days and it will come back, because the other bank will, there is a process around it, it will come back, right? Whether you're a banker or not a banker. But for that person, a 500 rupee transaction going bad and waiting for a couple of days for that to be reconciled is a lifetime journey for that person, because the impact is very different. And hence, I believe the phygital model is here to stay in India's context, and specifically in context of certain consumer segments, and specifically in rural and the mass-based segment.
Or neobanks, which will then rely on banks at the back end. Have a tie-up between a fintech and a bank at the back end, and offering all banking services over virtual channels. So would be interested to get the panel's views on how do you see these different models emerging, which work one taking the cultural aspect in mind of the customers and how customers behave, but at the same time how regulator looks at things, and which is enabling newer business models in this space. So I'll ask Amita, you want to go first?
No, please go ahead. But I just said I have a view. So somebody who's not spoken, I'm okay.
So Sunil, may I come back to you and you want to share your views?
Yes, Sandeep. It's a very, very good question at this point of time of discussion. And as Major Ashish said, digital is the mantra, the flavor. However, much depends on which segment are you catering to and how are you going to do that. So essentially, while you're looking at customer segmentation, it's not that everybody would like to have the BaaS model in place. However, there are some activities which, if not core, can be hived off, can be given to these uh, fintech companies, which can actually do a lot of research and lot of digging for you, which is not core to your activity. Say, for example, only finding out the credit score or finding out the credit history of a person who's not been onboarded in the banking setup. So essentially, in case if you have to look at doing a lot of research or doing a lot of activities, this is where the fintechs today are, coming up as an alternate. And secondly, they are also allowing you to have the business as service model, because banks would not like to go for a capital investment in these activities because they're not core. And secondly, the effort which is required would also require a drastic change in their approach from waterfall to DevOps or quick methods of software development. So looking into all these elements, and since they have a lot of paraphernalia, a lot of baggage to carry, so essentially business as a banking as a service also is emerging. However, much still depends on how much is the regulator ready to open it up for. Because today, getting into only non-core activities and thinking that they would be able to survive or banking as a service would survive may not be a very profitable proposition. However, the companies are still waiting in the wings to see what is the next move of the regulator and how it is adopted by the banking industry, so to say.
Yeah. So as a bank, that question also goes to Topendra and Manish as well. As a bank, you are open to these ideas and models. We have some other players already offering it.
Why not?
So Manish, you can go ahead first this
Sure.
time.
Okay. So certainly, to answer in a nutshell, yes, as a bank, we are open. Well, again, I come back to what I said earlier is more about following the customer's need and try to service that instead of being fixed to the way I want to do business, right? If you don't follow the way customers are changing their behavior, their expectations, we're not able to survive in the long term, right?
Thanks. So in fact, we're also running short of time. So maybe what I'll ask is rest of the panel members also to cover your concluding remarks as well as you respond to the new banking and the banking service. Maybe I'll start with Topendra.
Yeah, quickly. So from a BaaS and neobanking perspective, so we had been a little early adapter in this space, and as a bank we have been in this space for a while now. And if you look at it from a BaaS perspective or connected banking perspective, the front runner also has been NPCI to some extent with UPI coming in, and then UDI with Aadhaar coming in, and so on, and offering them as APIs. That is where the entire start of service as an offering came in, and they actually stamped it with legitimacy. Similarly, the banking services. So we what we have done is we are essentially also very connected in the partners ecosystem, and we as a bank we thrive on the partners ecosystem quite a bit. And given that scenario, the belief within the bank, or the belief that we have, is that uh, based on various kinds of journeys that these fintechs are coming up with in specific consumer segments, they excel in that space to some extent. So therefore, what happens is the front end being managed by a fintech, and the account and the rest of the accounting remaining at our end, and we forwarding the various microservices of our systems, banking systems, to on their front end, and we offering it to the customer, only extends our reach. Now it is a little different from any of the other banks per se. Maybe, say for example, Sunilji mentioned, his PNB is at a different level of evolution versus us. Okay, so we being a fairly younger chapter in this avatar, so we are for us, extending the reach in this format makes much more economic sense than anything else.
So from technology perspective, yes, as a technology partner, the banking as service definitely is fronting to be by the fintech companies, and the key aspect of that security and the compliance, because domain, the core banking has to follow some compliance from RBI, and they have to make sure that breach from them to the fintech has to be established to cater to the end customer. That's a very important factor. And Sunil was talking about the agility, because there are a lot of things are changing every day. The business demands today that they want to launch, let's say, new scheme tomorrow. They don't want the tomorrow, they want today, maybe yesterday. That's something business demands. How do you make sure that these all the changes coming to their customer side a faster way? We cannot follow just the waterfall thing. It's agility. You have to agility. Then Manish, I think Ashish was talking about the culture. So when we talk about the bank and as a technology partner, important challenges I have seen that culture. You have to bring our culture transformation first for the DevOps, and then you talk about technology, because there are many tools in the market. There are a lot of innovative technology in the market. The only thing is you need a people who are ready to change and adopt that culture. That is a key part for the digital transformation. And then talk about banking as a service, neo banking. Yes, it's again the change, the culture change.
My sense in today's context, if you look at neobanking, defines customer experiences, specific use cases. Can you really call it neobanking in India's context? My mind, no. There is no banking license that exists. It is basically fintechs who require a bank or a financial institution, the backend, to plug in, because that's the regulated entity which is finally responsible towards the customer, responsible to the regulator. How much of control can you exercise when you go with such models is something the organization needs to answer for itself before you step into it. Either you are the platform into which fintechs plug in and you have all the rules built into that platform so you can control the risk, the liability, to whatever extent is answerable to a customer or to the regulator. Second side of it is say that I would want a fintech to service a set of customers who I can't reach out to you because I don't want linear growth in my model. In that context, to be remembered, is that going to be you creating competition for yourself, or is this something you can collaborate and reach out better to population which was never anyway your population? Because in a linear growth model, if you're not able to reach out, better to collaborate with some good fintechs who created some good use cases, have a distribution reach, either digital or physical, and move forward. But then these are the questions that you need to answer for them. One, who owns the customer finally? And in case of an issue, where did the liability lie? And can you bring it down to a contractual agreement or build it into your model? Secondly, do you want to work it as a collaboration? Because tomorrow you do this, please also remember that if the fintech has an aspiration tomorrow with India's banking scenario opening up, move towards any of these licensed condition banks, which are in payment banks, small finance, universal commercial bank, have an aspiration moving that side and have given a better customer experience than what you give through your applications, well, that customer may just not be yours tomorrow then. So that's the context you want to remember. You want to take your calls, keeping few of these factors in mind. Back to you, Sandeep.
Thanks so much, Vaibhav.
Yeah, and not just that, quickly adding on top of what Major Ashish was saying, what happens is the customer actually is owned by the bank and not by the fintech. Now, essentially what happens is, and we have all seen the way the domestic remittance market has happened, the product becomes so commoditized that today, that API is selling like a, what can I say, it's a very commoditized product. We don't want neo-banking, products to go that way. And that is why, I initiated my days talks saying that, banks also need to learn, to create customer-centric products. Yes, I agree with all my peers when they say that, fintechs are agile and fintechs have a very custom use case that they are catering to. But banks will somewhere have to learn, bring that flavor into the product, and then maybe use fintech only for the distribution or only for the technology, not maybe for both of it. That's my 2 cents on it.
Great, absolutely, absolutely. And I think that's where I think as banks, we all have to become more technology enabled and become more and more technology at heart, because you would want to retain your core competency of retaining the customers. Otherwise, you're open to competition from that angle. So I think that's great, and I think we've shot the time as well. So with that, I'll conclude. Thank you so much for your time, for wonderful comments. And we have Babu also now, Babu and Ashish. And any other concluding thoughts from your side?
Thank you very much, everyone. It was a wonderful session together, and we could gain a lot of interesting insights. Uh, what we will also do is we will share some excerpts of this conversation even in our magazine, Banking Frontiers. And we look forward to a lot more comments from all of you. Whenever there is answers to the questions required from the audience, we would request you also to share the answers to that. Thank you for a wonderful conversation, everyone.
Thanks.
Thank
Thanks,
you,
Babu.
everyone.
Thanks for inviting.
Thank you.
Thanks.
Thank you, everyone.
Thanks,
Thanks,
Babu.
everyone.
Thanks,
Thank you.
Sandeep.
Bye.
Thank you very much.
Hello, friends. Welcome to Finivity 2021. We're having a fantastic series of sessions today. And now I'm here with Ravi Shankar. He's a Senior Vice President and Chief Marketing Officer at Denodo. Denodo is a data integration and data management company, and it is a leader in this field. Today, we'll talk to Ravi and find out what are the new thinking that is happening in terms of data management, data integration, and see how financial sector can actually benefit from it. So Ravi, welcome to Finovity 2021.
Thank you, Manoj. Thanks for having me on the.
Great to have you. So Ravi, my first question to you is this. Now, when I think of an e-commerce company, when I think of their data lake, I visualize thousands of orders coming in, thousands of orders going out every minute. Data is going in and out at an extremely rapid pace. But when I think of a data warehouse, a typical data warehouse, data comes in maybe once a day through an ETL process. And all that looks much less sophisticated compared to the way a data lake functions. So what is it that a data warehouse can learn from a data lake in today's scenario?
Okay. Right. So the data lakes and data warehouses, Manoj, are actually complementary technologies. So in fact, Gartner has released a 2x2 matrix. And just picture this with me. Assume there is data on the x-axis, and then there are questions on the y-axis. Okay. So the data can be broken into known data and unknown data. And the questions can be broken into known questions and unknown questions.
Yes.
When you know your data and you know your questions, like what are my most profitable products in the last 5 years, then your data warehouse can answer that question. So you put the data into the data warehouse and you have your business analyst, data analyst, run those reports, get that information and give it to you. Now, if you don't even know the data or even the questions, what questions you need to ask, then you need to discover them. And that's where the data scientists come in. So they use data lakes to put all the data in there and run multidimensional analysis to figure out what questions to ask. And then from that, they derive the answers. So
the data warehouse and the data lakes serve two different purposes, and they kind of coexist. So the data warehouse has been the workhorse of the analytical equation, and it has been around for the last 30 years. But the problem with the data warehouse is that it contains only structured data. But if you look at the data lakes, they came into existence maybe in the last 5 to 10 years, because most of the data that started coming in the last 10 to 20 years became unstructured data. So the data warehouse was not able to hold this unstructured data, and that's where the IT teams had to invent another repository that can hold both the structured and unstructured data, and the data lakes came into existence. So the data warehouses and the data lakes kind of coexist at this particular point, and they actually serve complementary purposes. So in a sense that the data lakes probably learned a little bit from the data warehouse mistakes, not being able to hold the unstructured data, and but they are serving different purposes at this point, and they are coexisting.
Okay, that's a neat explanation, and that makes a lot of sense. But that still raises a very fundamental question that organizations want a unified view based on all the data that they have. So with data lakes and data warehouses coexisting, and maybe multiple data lakes as well, depending upon the need, how does an organization get a unified view across the data lakes, across the data warehouse?
Okay, that's a very excellent question, because everyone wants unified data. Like, I'm a business user as the chief marketing officer. I want all the data, the marketing data, the sales data, which often resides in different repositories. Like the marketing data resides in a marketing automation system, the sales data resides in a CRM system like salesforce.com. But I need to get a unified view, because any marketing campaigns that I run, I want to see how that is impacting the sales. So I need unified data. If you take a look at data scientists, they need unified data across all of them, because if they need to run multidimensional analysis, figuring out what the problems are, for example, they are trying to figure out the error rates in a particular manufacturing process and trying to optimize it so that they can actually get the most output from whatever raw materials they have, then they need to be able to get access to all the data. So the need for universal data is very much prevalent in all the organizations. But since the data warehouse and the data lakes have become separate repositories, they have bifurcated the data. So Gartner has defined an architecture called the logical data warehouse architecture as the unification layer that combine the data from the data warehouse and the data lakes and provide that unified view to the organization. So at the core of this logical data warehouse is a technology called data virtualization. So data virtualization virtually integrates the data and it delivers it in real time. It is virtual because it does not physically replicate the data into a repository. Because it doesn't replicate, hence it is much faster in delivering the data to the consumers of the data. So again, imagine like a three-tier architecture in which the data warehouse and the data lakes are down at the bottom. Okay, and then you have the logical data warehouse in the middle, and then you have visualization applications like the dashboards, reports, Tableau, those kind of ones on the top. So those are the three layers. So the logical data warehouse unifies the data from these two disparate repositories, creates that unified view so that the reports and dashboards now get the data from the logical data warehouse, all the data, and they can represent the entire enterprise without having to go down to two separate repositories and figuring out which data is where. So that's how you basically gain the unified view, not only with data lakes and data warehouses, but also any other data that are siloed within your organization. The logical data warehouse becomes the uber single enterprise data layer to unify all the data.
That makes a lot of sense, actually. And the last thing that you said, that this would cover any data in any kind of separate silo into this logical layer. That makes sense, because I think there'll be a lot of data that is extremely critical. Maybe it's about the organization, some business intelligence, which will not go into the main warehouse or lake or something. and yet it
Right.
can still be accessed. That's great. So, Ravi, my next thought is this: big data is a pot of gold, but it is also seen to be a big headache to manage because it's very dynamic, it's increasing rapidly, the costs associated with it are huge. So, what kind of problems has technology managed to solve, and what kind of problems still remain to be solved when it comes to big data?
Okay. So as I mentioned earlier, Manoj, the big data came into existence because right after the millennium, more unstructured data came into force. Like we had social media data from the likes of Twitter and Facebook. So those ones brought in a lot of unstructured data. We had streaming data that started coming in, the likes of Netflix and all these guys started putting the streaming data. Industrial IoT started becoming big, and a lot of manufacturing companies had their equipment with a lot of devices that were actually providing a lot of IoT data. And so all these data are basically unstructured data. And imagine the volume of data that is actually collected because of the real-time nature of this. Because the volume was so huge and they wanted to store both the structured and unstructured data, they came up with this concept of the big data. And pretty much like Hadoop was the technology that actually was the forerunner in terms of coming up with this the big data and being able to store huge volumes of data across a distributed network of systems. Okay, and it actually had an innovative idea which was called schema on read. So which means because the data is coming from all these disparate sources, they are all in different formats. Okay, structured, unstructured, semi-structured, and you basically dump all the data into the big data repository, and then you worry about the format only when you consume it. Okay, so when you want to consume it from an application as an API, then you would probably get the data in a real-time format, synchronous format. If it is going to be analytical applications, then you need it in SQL. So that's how they basically figured out. Now, the analogy I will give you is that um, let's say you take all the furniture in your home and you basically dump them all in your garage, and you take it only when you need it. So let's say you're going to eat. You go get the dining table and the chairs from the garage, bring it, set it up in the dining area, and then you eat. When you're ready to sleep, go to the garage, get your bed and mattress, and then set it up in the bedroom and use it. Now that's where the failure actually happened. That schema on read became a problem because the complexity that was associated with all the data that was put in all different formats, they couldn't figure out the data quality aspects. And when they started reading it out, there became a problem. So that's where you would have probably heard the data lake basically became a data swamp, right? Where a lot of things actually went in and it became all got muddled in, and there was no clear way of understanding what data is there, how to go get it. It is like finding a needle in a haystack. Like it's become so volume. Where do you go search for what data? So that was one of the striking death knells of this big data, or particularly the Hadoop technology. So that's where the problems are. And as a result, what has happened is companies actually envisioned having the data lakes and even the Hadoop based big data systems as the single repository, because as I mentioned, companies want unified view of the data. But the big data was supposed to deliver on that promise. Because of the complexities, Gartner actually says only 17% of the big data systems went into production, which means 83% of whoever invested in those projects basically failed. So a lot of money went into this, and a lot of money was wasted on it. And you saw what happened to the market. Mapr, there were three top vendors: Cloudera, Hortonworks, and Mapr. Mapr went out of business and was eventually acquired by HP. Hortonworks was acquired by Cloudera, and Cloudera is also struggling at this particular point. So the big data market basically imploded on itself because of the promise and the hype that they came up with, and they were not able to deliver on it. Now we are left with multiple data lakes, multiple data warehouses, and now the data is also disparate in the cloud. So we have disparate systems of all these data within the enterprise.
today's solution is practical, though it may not be as elegant as a Hadoop or something else, as a totally
See, the
integrated.
technology is a wonderful area in the sense that there is a problem, you come up with a solution, but the solution creates its own set of problem, then
Yes.
you need to come up with another solution. This has been the evolution in the computer industry for the last 30, 40 years.
Correct, correct. It's a step-by-step uh, problem and
We're making
solution approach.
progress, but every time we introduce something, it's not foolproof. There's always some problem associated with it.
So if we get down to a big problem, a big challenge, if not a problem, if all kinds of repositories are still there, lakes are there, then how can a organization have a central repository for all its enterprise data in one place?
Right. So I would like to explain a story which I actually presented in Dubai about like 4 years back, in which if you look at it back in the 80s when the databases came into existence, there was a, the systems were basically all the card reading systems. So they needed a place where they can store all the data in a structured way so they can easily find the data. And that's why the databases came into picture as a unified way to put all the data. And they used the word of single source of the truth. The databases became so popular that there was not a single database within the company. Pretty soon they all started multiplying. So you had applications, say SAP holding some data, Oracle holding some data, IBM holding some data. There were multiple different databases. So once again, that single spread into multiple different repositories. Then in the 90s, the data warehouse became the single source of the truth to unify the data across all the databases, because the databases held structured data, and the data warehouse was supposed to be the single source of the truth in the 90s. But the data warehouse also was very popular. People started duplicating because it was so big. They came up with smaller data marts and so on. That also started multiplying. And in fact, they came up with this concept of an enterprise data warehouse in order to hold all the data. So then, as I mentioned, in the millennium, unstructured data started coming in form of like social media data, streaming data, IoT data, and so on. And as a result, the single source of the truth, the data warehouse, could not hold it. So they had to come up with the big data to hold all the data. And they started putting all the structured, unstructured, everything into the big data. But as I mentioned, that did not work out because only 17% of them actually went live. So that also has become very limited. So I explained this concept called data gravity, Manoj. The gravity of the data pulls the data to the sources where they are being authored. Okay, so we are artificially trying to pull the data away from and against the gravity into a central repository. It is like throwing a ball up in the air. It is going to come back down. So you're trying to pull the data against the gravity into a central place only for the data to go back to the sources and be disparate. There is a value for unifying the data in a repository, but the approach is not to have a single unified repository. You need to have a virtual logical repository powered by data virtualization. You have to stop collecting the data in a central place. You need to connect to the data wherever it is and bring those data into a unified view. And that way you kind of liberate the data from being as much data is generated at the sources, and you're gaining a unified view without pulling it against the gravity in the central place. That's how you gain the unified view. And many of our customers have actually been very successful, very large BFSI companies, and created that logical view by which they have able to solve this single view of the data for the entire enterprise.
Very interesting approach that you mentioned about data gravity. So it's rather than fighting the law of nature, one should leverage the law of nature and not force data to go against data gravity.
Right.
Very interesting, very interesting. Let me come to the last and final point, which is that with all this data privacy is becoming extremely critical nowadays, and which shares the space with, let's say, data governance. So how is Denodo recommending better data privacy and governance to its customers? How are your customers leveraging your tools and technologies to achieve better privacy and governance in the real world?
Right. So privacy is very much part of the data governance realm and the data and the government regulations. In fact, I will kind of talk about one of my customers in the BFSI in the United States. And so this is a very large bank, and they actually lend a lot of money for buying big ticket items, like buying if you want to lease airplanes, or if you want to buying like big time copiers, or trains and all that stuff. You would go to this particular bank to get the loan, and the loan runs into millions, billions of dollars.
Mm-hmm.
And what this bank acquired another bank. This was during the financial regulation breakdown in the 2008, when we had the financial debacle, right? Like the whole world economy basically collapsed because of the
Yes.
financial lack of regulations. And that's when there were companies in the United States that were deemed too big to fail. So they call them as SIFI, like systematically important financial institution, or too big to fail. So the government put a lot of regulations in place to make sure these banks do not actually collapse by themselves. So this particular bank had to comply with the government regulation of trying to protect the data so that unauthorized access could be prevented across its own bank, as well as the other ones that it was acquiring. So they use this data virtualization as a logical data layer to basically lock down the data underneath the systems. This central one became the security area that would actually prevent people from going down underneath and maliciously or unintentionally changing the data. And as a result of centralizing the security in one particular place, whoever had the right to access the data were able to get the data. You have provide the right credentials, we give you the data. And if you do not have the credentials, we are not going to give you the data. And the second thing is, if someone is trying to actually make some changes and unintentionally they change something, or maliciously they try to change something, you are basically doing any change in that middle layer. We are not actually making you go down to the bottom layer, which is where actually the original data is there. So they protected the original data from such a way, and that actually was a big data governance initiative powered by this data virtualization layer, and that enabled to provide the privacy and the security of the data for the entire organization.
So that's interesting. So this virtual layer has at least two purposes. One is efficiency, and the second is security and
Exactly.
privacy along with that. That's
Exactly.
great. I think that would be a big, very interesting relevance to BFSI organizations.
Oh,
Because
definitely.
for them, data security is such a big challenge and such
It
a
is.
big issue that simply cannot be ignored. So I think intelligent solutions like this could give a lot of breathing room to our BFSI community in India and everywhere in the world.
Definitely, I would encourage them to follow the suit of very many BFSI organizations that have used the data virtualization for multiple different digital purposes. So I would digital transformation purposes, and I would encourage them to evaluate this technology.
Okay, that's great. Thank you, Ravi. Thank you for those wonderful insights, and wonderful to have you here at Finovity 2021. Thank you, Ravi.
Awesome. Glad I could be here. Thank you, Manoj.
Thank you for coming in. And today's topic would be on building trust and aligning to changing security goals. It's a very interesting topic and a very I mean, changing times in terms of cyber security. Okay. So without much ado, I will not bother to introduce each of the panelists, which I have to do. So let me just quickly do a round. I'll start with Mr. Reddy, who's the CISO of UBI. Reddy, sir, put your hand up so the audience knows who you are. Okay. So then we have Pawan, yeah. Then we have Pawan Chawla, who's the CISO of Future. So we have somebody from the insurance. Then we have Sanjay Tiwari, who's from IIFL. He's very early because he wants to capture this new NCD issue coming up soon.
Yes.
So then there's of course Vijay from good old Mahindra Services. I used to a lot of good vibes about Mahindra.
Yeah, I'm from Airtel Payment Bank.
Okay, fine. So my transcription of the old man is messed up. Your name was there in the panel. So welcome. Okay.
Thank
you. So we have banking, payment banks, we have small banks, we have insurance. So I think we have a good audience, good panelists today. So thank you all for joining in. Asim needs no introduction. He's the big boss of Akamai, product manager and the guru on everything to do with what keeps us awake. And then of course Chinmay also works there. The rest I will leave out, though they are not visible to you. Okay. So I'll start with the first question for the panelists. And this is a very simple question, but whoever wants to take it first can do that. Okay. Time and again, we have seen that financial services remain to be the top choice as an attack target for cyber criminals. Are you seeing any shifts in attack during COVID-19?
The shifts, what I see personally, is that there is a huge risk on the domain names because they have launched one fake website and they have redirected through a fake link and they captured all AMP, OTP, CBB. Earlier, people were, like medicines and all, they were doing a lot of phishing simulation, and now vaccination registration and all these things are happening. So this one, the phishing and smishing attacks on rise by using the domain names, and there is no control, and we are seeing that the domain names are being created at different countries altogether, not only in India, in some corner of the country. It is being created at Japan, at North Korea, at South Korea, USA, and all. And at the same time, there is one more, attack which is surfacing that during this COVID situation, a lot of job losses were there. So people are trying to use the logo of the organization, and they are saying that they are recruiting people for their organization in social media and in different website like OLX and all. It is again a uncontrollable situation. Now it comes to the social media. It is again the top senior officials. They are being targeted with the fake account where there is no regulation. Recently, fortunately, we have got some regulation on social media thanks to Government of India. They have come out very clearly, that fake accounts which are being created, and now I think within short time all accounts will be validated with some OTP or something. So that way, I think the surface will be mitigated. Not 100%, but the way it has gone, it has shifted. The kind of the transformation which has happened during this COVID, probably the shift is again it will go on, but certainly some regulation mechanism should come in. So more or less, what I meant to say, the shift in attacks are primarily in three. One is your phishing attacks, which are commonly it has grown like anything. And second is the domain names, and third is the DDoS attacks. We are also seeing the DDoS. Primarily, these are the three types of attacks which we have seen in the last December to till today. So the necessary mitigation measures are required for every organization to take it forward. So this is from my side.
Thank you very much. Pawan, over to you, please.
Yeah. Like Mr. Reddy touched upon, there are a number of domains which are registered by the attackers. So we have seen a big shift ever since the COVID started in 2019 December. I was reading multiple reports, and there were some interesting facts which I would like to highlight here. That every day since January 1st, there were around 500 domains which were registered by the hackers. Obviously, they are not the company's website, not domains. And now we realize that what Mr. examples of the kind of attacks which hackers have uh, used to target the multiple banks or other organization employees and customers to attract them and make them share the critical information. It is very evident and it is very clear the modus operandi has changed. There are different ways of forms which have been adopted by the hackers, and now they are using and they have used uh, human emotions to do a targeted attack to the customers. We personally, as an organization, I can share the numbers with you. Last year, we have blocked more than 20,000 indicators of compromise. More than 20,000 indicators of compromise in a year is a big number to be prepared for. And we have seen that some of them were there in the environment, and but we were successfully able to take proactive actions on that with the help of advisories which we have received, and able to protect against those attacks. And similarly, other organizations might have used the same indicators, or might have got the advisories where the proactive action has been taken. But the emphasis needs to be given to the number of indicators which we have received, and these are the numbers which are available in the open market, on which the advisories are created. What if there are attacks for which the advisories are not available? Because most of the people, what they feel is, organizations we have seen, even if they are under the attack, they hesitate to share the information, and that is where you know that something has happened, but you don't know what to do to protect yourself from that. Now, if somebody is ill, he can go to the doctor and take a medicine. If you don't tell that what is your problem, nobody can give you the medicine. The others can also not be protected from that particular disease, right? Similarly, in cybersecurity is like that only. Until and unless you know from what you need to be protected, you will not be able to protect yourself.
Yes, good thoughts. So I'll hand this last bit over to Asim to give an industry perspective, what his thoughts are, because if any other panelists want to say something before Asim, you're most welcome. Akhil, you wanted to say something, and then after that, I'll give it to Asim.
Just quickly in 30 seconds or 1 minute. So actually, whatever your question was there means related to financial things. So my always perspective, always attacks always it is there in across industry, but the financial thing is like where money lies. So always, and but during this scenario, you can say it's an emotion based attack. So whatever people have utilized this, Mr. Reddy and Pawan also they have mentioned. It's like people are creating some phishing, wishing, and all those things. It is getting created. And today, this news related to our biggest public sector bank that is also related to that. Now you consider it's now we have reached to the phase where this medicine and all those things it has come. Those pharma companies, those are also in the targets. So that is also some news are there. It is not open, but still. So again, some of the other thought process going on whether government of India can declare those companies at least ad hoc basis that is critical infrastructure to protect all those things. Because ultimately this you can say it's a cyber attack, and although it's a very easy to take anything instead of going and doing that robbery. And definitely it's as per a study also around 3 to 350% increase is there during this pandemic time in the cyber attack. And this is across all the industries.
Thank you. Okay. Asim, you want to say something?
Sure. Thanks, Subbu. So I think my fellow panelists summed it up really well in terms of what we were seeing, threats growing, right? I think attackers always shift towards where the industry is shifting or where the users are shifting to. So we've seen in pandemic for the first time, probably in the across the history, so many people working from home, right? This is probably the first such instance in our life at that level where billions of people are stuck at their place and trying to work from there. Obviously, it's not as secure environment as the corporate environment. Attackers know it. While we are working for home for the first time, attackers have been working from homes and basements for all that for their entire life. So they know the shift has to be attacking towards the users who are stuck at home, right, within vulnerable devices and networks. Also, there's a significant shift on a digital side now, right? Because a lot of businesses that used to be in a brick and mortar sort of a setup, with pandemic, everything had to become digital. The users could not really go visit any place. So there's a upward trends about digital access, whether it's bank, insurance, any business, OTT, media, video. right? The number of users online has grown significantly, and that's for attackers. It's like striking a gold. They know that more online users are there, and there's a lot of chance of attacking, right? We've seen a lot of growth in attacks like phishing because of the pandemic situation. Now, fake domains that either talk about, let's say, masks or vaccine or COVID, they are being registered. For financial services, since most of the users are online, even if you generate a domain that talks about your bank is coming up with a new offer, or your bank ATM is down or might have an impact, as an example, you're bound to see a lot of user interaction because of the whole digital ecosystem has changed right now, right? And then we saw attacks like, video credentials of Zoom getting leaked out, where now the account takeover suddenly became a lot more popular because a lot of people who used to log into the Zoom earlier, the attackers had their credentials already, right? So I mean, for financial services, as I just heard, one of my fellow panelists say that financial services is an industry that's always under threats because of the financial motivations that the attackers have. So from that perspective, I don't think that will change in near term. That's something that has been there and will be there given the very nature of the business. But going by the amount of data and the volume of digital transactions today, it becomes even more important for financial services industry to be more resilient, more scalable, more secure than ever before.
Okay, Asim, I'm going to overload you now because you seem to be in a very spirited mood today. So the next question is for you. Okay. All of us have experience working with major financial services institutions across APIs. I think API is the glue which allows us to do a lot of things which normally would not have done, especially in the COVID time. And what, according to you, are some of the emerging threats against financial services, and are organizations ready to defend against those, right? API is like welding, you put both the connectors, but what about the security for that? And I think that's something I think I want you to throw some light.
Yeah, thanks. I mean, that's both a very interesting and an important question. Yes, APIs. I really can't think of any conversation that I have today. At least in a day, I don't talk about APIs, especially financial services. Some customers of ours in Australia, across APJ, very heavy adopters and implementers of APIs. New business models, new partnerships, new ways of rolling out apps to the users. New services for the users. All is made possible using APIs. Moving away from legacy systems, specifically on banking section, right? Going more towards cloud agility requires movement towards APIs or integration of APIs. Now, while most of the focus today is always towards, how do you get this to work, or how do you kind of fix this problem of legacy architecture, move to more agile architecture using microservices and APIs, a lot less attention is paid towards the security of APIs. That's something that I see banks have woken up to. Most of the customers that I speak with, financial services industry today, API security seems to be one of their top priorities. More so with the emergence of fintech and fintech-like businesses, that the banks are venturing out to on the partnerships they have. So yes, the challenge though is that while attacks on APIs today are significantly higher than the traditional websites and HTML forms, organizations today treat APIs as just other form of their websites and applications. I think that's the trend that needs to change. APIs needs to be looked under a very different lens of security, having a more robust defense in depth, specifically which is tailored for APIs, right? Today, if you look at, many organizations are still talking about rate limiting on APIs, or maybe providing basic authentication on APIs, still using legacy form of authentication and encryption. Those are good things to have, but a lot more has evolved in API security space, and many organizations are still playing catch up because API security still seems to be in their checklist, but not yet prioritized. I mean, many breaches, if you see in the last 3-4 years, if you pick up the book of breaches, many of these breaches have happened through APIs, and many of these APIs were not even under radar of the organizations, because APIs are fairly quick. You launch them. At some point of time, they became dormant. Then the developers release another version of APIs. The other version of API is still exposed on the internet. It's a different ball game and different problem to consider. And hence, I think what I'm seeing as a practitioner is more and more organizations starting to understand that this is the right time for putting a lot more stress and mitigation practices or best practices for API security.
Thank you. Thank you. Moving on, I think little more focus on APIs because I think that is the Fevicol which binds most of the applications together. Sorry for taking a very popular brand name, but the gluing is good, but the security, I don't know. So one more question on this is, let's talk specifically about APIs in initiatives such as open banking, where the need to integrate with third-party ecosystem is pushing banks to adopt more agile practices, especially with respect to API adoption. But we all know that API security for most organizations is still not being treated on priority, something which Asim had highlighted. While attackers continue to take advantage of this, how are you as end users dealing with API threats? I found Vijay very excited about the API story, and I think he has a lot of API interconnects. Vijay, would you like to open the innings for this question? Thank you.
Thanks, Mr. Subramaniam. API security is something which need to be taken into consideration right at the development stage of any given application. First of all, the architecture need to be very clearly adopted, understood first of all before even you start developing that particular application. Point number one. Point number two is understand and clearly state which are the APIs which are going to be utilized for that particular application, and it cannot be on an ad hoc basis. People generally what they do is they go search for something and suddenly a fintech is there, they start adapting without even understanding whether that particular thing is really good or not. Okay, just because something is there, very fancy name, probably they start adopting. First of all, that thing has to go. People need to ensure that there is proper testing that is being done for each of it before adopting. There is definitely a time allocated for each of it, and then of course started integrating with the application which is planned to be introduced in the organization. That is one part. The second part is all these APIs, as very clearly stated by Azim, undergo a lot of change. And as he rightly said, many of them are just siphoned and they start using the older, the newer ones, and older ones still remain as part of that particular application. So lot of cleansing need to be done about this particular thing. A review of the application more specifically from the API perspective has to be done on a continual basis. Very, very important. You can have application security testing and all that stuff. That's a one-time thing, and probably at specific intervals you will perform. More than that, what is important is you pass it through some kind of an application security systems, technologies. A lot of technologies are there to adopt. You pass them through that particular thing, understand every moment, and then anything is happening. And also wherever possible apply MLA components which will clearly indicate there is something wrong happening or some kind of a fishy session is being created with that particular application. So that will help us point out which are the probable APIs which is acting very different from that of the normal, and ensure that that is being quarantined and necessary action is being taken. So that's the mechanism that need to be followed, and it has to be a continual process in the organization.
Thank you, Vijay. Very good perspective. I'm glad you went to the back end with secure architecture first for API before we start anything, and then put in the tools. Sanjay, you guys also do a lot of API integration, right, at IIFL? What are your nightmares?
Yeah. So I was patiently hearing everyone, but rightly said number of views there. API, as I said, all digital adoption has happened through an API everywhere. Asim also mentioned that, and Akamai has that product of an API security. I know them. But my two viewpoints. One is there is you put some product for an API security, since all digital acceleration has happened through an API. So whatever has happened through an API, and all banks, financial organizations have taken that. But the main problem that I have seen, in fact, I have seen many of the attacks happening is through the exploitation of the functional bugs of APIs. It's very easy, as you said rightly, it is a connector between the front end and the back end. And there are a number of attacks that keep on happening. Account takeover was one of them, but there are a number of simple and logical bugs which is still there. So if I go on a particular big website, big bank's website, and I try to hunt them, I'll be easily able to find 2, 3, 4 easily bugs on those API. So an IDOR or account takeover, there are many of them which could be easily done, as you rightly said. From my perspective, from my organization, we do take the due care of these APIs but see, it's always there. The business has a requirement, as Asim said. It's very easy to put into production. Tomorrow there is a requirement within a day's time. I build and I have to move in a production. I'm not able to test that also. What do? Do I tell business you cannot go? So tera zarurat nahi hai, right? So I have to balance those things. I say, give me a day's time. I go ahead, I test it out, but probably no team would be able to test it thoroughly within a day's time, and that's very important part of it. Hence, there is a control that is required on the testing part of it, thoroughly testing it, putting into production, and then you can have a mechanism, kind of an Akamai or some tool where you keep on continuously monitoring. Your older versions don't come, you have an inventory in place, and blah blah blah. A lot of steps are there, so I may not go into that detail, but there are measures and steps. As Asim said, it's high time organizations start taking this API into API protection very seriously, because most of the attacks, in fact 90% of the attacks are happening through an API. Last week one of the wallet fintech got breached, and that was through an API. So there are a lot of data available in the social media around, but that was through an API. There was an API SQL injection and API extraction of data. So I agree with them, and that is where, in fact, as an organization, we started our journey long back. I don't say no one would say they are fully covered, but we take due care around it. An organization should ensure they give a lot of attention towards this.
Good point. I just want to add a perspective to this. I call the Indian financial security as a three-legged stool. You know the challenges of on a three-legged stool? If you ever tried standing in one, the probability of you crashing is very high. Who are the three legs? One is the great RBI, whom Mr. Reddy mentioned about. Then there is a great IRDA for the insurance sector. And then there's a good old SEBI, right? Now they stand on three different legs with three different attitudes, three different perspectives. Okay. I don't want to comment who's ahead of the curve on this. I really don't want to comment. I think they're doing a good job, but it's up to each user to do a better job. So you can't say RBI only gave me a framework last week. Because RBI and all banks are running on Gopalakrishna committee report. Even today they run. Gopalakrishna is still alive, fortunately, if you want to. But the fact remains is Gopalakrishna report about 20 years old. Okay? And I'm a great critic of that report because it was relevant 20 years back when you wanted to jumpstart. And today, 2021, I think we need. Same thing IRDA cyclically have been trying to do. At least RBI has started a dedicated security under our good friend Sarvade. Okay, I don't think SEBI has got anything to do in that. Okay, and actually, if I could have given a press release, NSE failure was because of security threat from China. That also would have flown in economic tax. Absolutely, and so everybody would have been very happy with that explanation. So I think we need to get serious about this. I'm just adding a perspective, panelists, because I think I have a lot of gray hair. Okay, so I will move on to the next.
Sorry, Mr. Just before that, I just wanted to, kind of chime in on the last part, because I think it's a very important discussion that we brought up using frameworks and the practical approach side. And I mean, from my perspective, are equally important. Frameworks have been there, as we rightly heard. Whether you follow the UASC methodology or you look at the Gartner framework for protecting the APIs, like discover, protect, and analyze sort of thing. At the same time, you always know or prepare yourself for a disaster. That's why you need solutions in first place, right? Because there is no silver bullet for security, right? So you know that you're going to be rolling out something, and there is a potential for a risk for that something, and that's why you need defenses in place. Else, as a matter of fact, but I think to me, always security is about the balancing act. Business should carry on, security should carry on. There is no stepping back by either of them. And that's why we need approaches that balance out. Either it's using the architecture and there is a continuous practical assessment and implementation that keeps going on. So yeah, just wanted to kind of bring my perspective on that one. Thanks.
Excellent, Asim. I agree with you. We always be top of the next threat, right? We can't expect the regulator to be on top. Nowhere in the world, forget India, has a regulator been ahead of the business. Never. There's no instance where the regulator has ever found something before it happened. Okay, so let's not, be. I mean, the idea was not to criticize our regulators. They're doing a wonderful job. Okay, so and I think your point of frameworks are very important. Okay, and somewhere that sort of when you go to any of these great seminars which we have, if you search for framework discussions, there'll be very few. Maybe Gartner would have one session on frameworks. That's it, or somebody else. But really, framework is left to all the PhDs to do their bit in the labs. And reality, there has to be an interface for the framework with the reality of the business. Now, I used to be with a very dynamic businessman who now chairs a bank. He used to be an NBFC when I used to work for him. Overnight, we will do a product. Okay. The product will be deployed on Excel. Okay, no security, nothing, Excel. If the product succeeds, we will build a software on it. If the product fails, the Excel is buried. Okay, very dynamic guy, and he has grown a big business today. I won't mention it. Okay, but I think that is a lovely strategy because from a risk perspective from the business. But he always was for making a product and putting a database finally. He said, let us try 3 months. If there's a traction on the product, we used to be in higher purchase those days. Let's do it. Otherwise it's fine. We kill the product. So, I mean, so the business is also important in that perspective. Okay, so I'll jump on instead of giving a lecture to my esteemed panelists. Let me move on. Okay, there's one more on API coming up, and this is specifically on banking and bankers. So I want both sides because the insurance company deals with bankers, NBFC deals with bankers, everybody deals with bankers. So there's only one banker today, senior banker with us, Mr. Reddy. So I want everybody's perspective on this, both as a user as well as the service provider. As the user reliance grows more on internet banking due to COVID-19 pandemic, there is a high probability that your website and ABIs are not ready to handle that amount of traffic, impacting user experience and dealing with degraded performance. Did you anticipate this? How did you handle this situation? So the minute your website starts degrading, it is open for attack. Right? It's a fundamental. So who wants to start this? Stay ready. I will not push you on this. Okay? Up to you if you want to start since you're a banker. But all of us have this. Now, Mr. IFL's public issue is going to have this. So Akhil's payment bank will have this. So
yeah.
Over to the panelists. Yeah.
So I'll take this. So ultimately, this traffic and other thing being as a digital bank, because my earlier background, it is from public sector bank. There are also now currently in a digital bank where each and everything we are expecting it through the digital platform only instead of my brick and mortar type of run. Definitely, and it is not a new miss this load and other thing. Definitely, it is not related only during this pandemic or something. So all these things like how my application architecture design is something, how it should take care of this load, how it should traverse to the load balancer side, and all these things it need to be taken care. So definitely this part basically it start from the design side, not like a development. Like earlier you were giving example, design that product in Excel sheet and after that it can be done. So definitely for the software side, I think it is not going to happen in that way when considering this load balancing thing. Once design is correct, after that development accordingly, how we can shift that load and all those things, I think that need to be taken care of.
Let's come back to the question now. Yes, good question, good right thought process. So with the advent of hybrid and private cloud infrastructure, many banks have built private cloud infrastructure and also many are in hybrid. Okay, hybrid and private cloud. How do you ensure the web performance and security services work across your distributed data centers and hosting environments with the required performance, controls, and security? Signing up the cloud is the easiest. I think the last three are very important. Performance, controls, and security. I want to add one more to it, which is not security, which is the cost. How do you manage the cost also? So I leave it to open. Any cloud adoption here among the panelists, you get a first chance for whatever, whether it is storage or whatever you adopted the cloud, share yours. Sanjay, you're in the cloud. Huh? Okay, good.
Yeah. So we we have adopted. In fact, we have started adopting cloud due to this COVID in a very big way. One, due to a lot of advantages on the agility part of it, accessibility. What we have done from the security perspective is we have strengthened on the zero trust architecture kind of the fluid parameter. So what has happened is the perimeter of my security from the security perspective is now fluid. So it is moving to cloud, it is on premises. I have an hybrid structure around that. So what we have done, we have put controls, necessary controls, generally on the identity and access management control. So people have started accessing systems from home. Now, how do I control those systems? What access do they have? Do we have a multi-factor authentication kind of a thing, or what limited the role-based access control we have? So is strict enforcement on those sides from the security front. The cost and the agility perspective, obviously there's a lot of advantage around it. Everyone would agree to it. As and when I want to scale up, I can scale up, I can scale down. That saves me a cost, a pay per use kind of thing. I don't have to invest into infrastructure around it. As and when required, whatever components I use, or either web or application or licenses kind of thing, so it's available and I pay later on based on the agreements to the cloud service provider. So all these advantages have been there, which we have observed over a period of time. Security is one of the headache. I said we have started adopting zero trust, but it's there. Since you have an hybrid structure, some people would be directly accessing some workloads on the cloud, some would be on the on premises kind of thing, some would be going from on premises to my hybrid environment. How do I control them? What access do they want? But we have started adopting a lot of you could say zero trust framework. We have started controlling on the identity and access control. So these are the controls around which we have tried to implement.
Thank you, Sanjay. Other panelists, surely you will have something on the drawing board, so free feel to give your opinion. You can't avoid the cloud today.
Okay,
So
let me take
add
it.
a perspective. Acha.
I think
you
Vijay
want
wants to go first, Pawan, if it's okay
sure.
with you.
Yeah, absolutely.
Thank you. Well, when it comes to cloud adoption, first of all, the strategy has to be clear. Whether the organization wants to have an hybrid mode of adoption or a private cloud, pure private cloud kind of a component. Okay. And then again, the cost component. You have to be very clear what the CFO is allocating. Basis what CFO is allocating, determine which is the particular model which will really suit us. Right? One is there are two aspects. One is short term and also in long term, because we should also be very clear if in case it is long term, then accordingly we need to work out the methodology with that of the service provider, or else we will falter there, because at any given point of time, if the regulator comes up and say, hey, come on, close down all the shop out there, get back. So you need to be also clear what is the kind of MOU you have with those guys, to see for it that whatever adoptions you do in the cloud, you'll be able to bring it back to your thing. Supposedly you start using specific frameworks of the cloud, you cannot bring it to on-prem directly. You have to be very clear whether you will adopt a private cloud model wherein you will be able to sync and get back all those things into the organization. That is point number one. Point number two is with respect to that of how your solutions are being securitized when it is in the cloud component. Even if you start adopting any one of the service provider, be it your Google, the Azure, whatever, every name you have in the billboard. Now, when you happen to talk about the security is not going to be compromised just because it's in the cloud, and it is not the onus of that particular provider. You are still responsible, and you have to sign off whenever there is any kind of a breach or anything with that of the regulators. So you have to be clear about that particular aspect of it and provide the needful security. Only difference probably is you can extend the security what you have on prem to that of the cloud component by having cloud sensors equivalent of it there, and get the necessary intelligence or put in the necessary controls out there. That is point number one. Or probably use cloud native security components, adopt them, and then try to have a clear visual of that particular thing through monitoring and also through controls. These are the two possible mechanisms which you can adopt, and see for it that everything is well monitored, and time to time you review that particular thing. Because if you assume that it's all done and you leave it, it's not going to really work out, because there is a lot of changes happening in the cloud. So you need to be well informed about that and do the necessary measure to ensure that they are sufficiently safe and secure. At least for the knowns, you are really secure. But yeah, unknowns will always be there, which is beyond control.
Thank you, Vijay. Pawan, over to you.
Yeah, I'll take a minute because my co-panelists have already touched based on the pieces which I wanted to talk about, and thanks for helping me out and already covering those points.
No, Pawan, you have to act at least, I mean, as a teacher, at least 3 points you have to give us.
Okay.
Start stretching your mind.
During this pandemic has taught us one thing. One, the agility, and second is the availability, which with the traditional way of implementing infrastructure was always a challenge. Adoption of cloud, if you look at it, might which was not even there in the agenda of any organization, has been the agenda of the organization now. The adoption of SaaS-based product has increased, and people have realized that they can actually give you the equal level of security as you get what you can achieve from a traditional way of implementing a solution as well. Like Vijay has correctly mentioned, the cloud adaptation has to have a strategic view, and we need to have define a very clear roadmap of what it need to be uh, adopted, how it need to be adopted, and the way you want to implement that out. Like Sanjay has touched based upon, security is the foremost priority for any organization, and it has to be in line with the security requirement of the organization. Now, I touch base on the ROI of that as well. If so, I differ, Vijay, from that perspective from you, because if you can prove that the cloud adaptation is going to give a better result with the better availability and the eligibility, I think no CFO in the world will say no to the adaptation, even if it is in plus X amount of money. CFO will definitely give you, because he knows that what revenue can be generated from by adding this X amount to the portfolio. That would be my say, Subramaniam sir.
Thank you very much, Pawan. So, any other panelists want to add? Otherwise, I'm going to hand down the baton to Asim to give a different perspective. So, anybody else wants to say something? Because cloud is, yeah, please. Okay, yeah.
Just one line I will add it. What Vijay and other panelists was mentioning, like security. So I'll talk about that thing. Just one line. In security side, it should be definitely after strategy formulation, adoption, and all those things. Security, it should be aligned whatever, if at all, if it is our internal, if it is a hosted. So it should be in the same line. Second thing, which we say always a punchline, like in our sense, means anything we can transfer that responsibility to the cloud side provider, not the accountability. So ultimately, if anything is happening, that ultimately we are accountable, not only just responsible. So all these controls, whatever we are expecting as per aligning with our security controls, it should be implemented there. Continuous review and all this configuration and other things need to be taken care by us only.
Thank you, Akhil. So Asim, can you give your perspective?
Asim,
you have to unmute your mic, Asim. I think we have made you listen a lot today. So.
Sorry about that. Yeah. Sure. So I think from cloud perspective, the most important thing which I think my fellow panelists covered is obviously it is a strategic decision, and you need to have a very clear idea about why do you want to go to cloud. And most of us today know why, right? The amount of agility that businesses require, the amount of scalability that businesses require, automation, costs, all of that in a long term plays out better with cloud. However, one thing that people or organizations need to understand is that not all clouds are built equal, right? There are different flavors of cloud out there: infrastructure as a service, platform as a service, software as a service. It's upon your requirement and your assessment that can really yield best results. From my perspective, I think for financial services, two key things that come to my mind is what you mentioned about, right? Especially when you have hybrid setup or you have your data centers, you have half cloud, that sort of a setup, is the cost and the continuity of security, which is, both can be achieved using cloud because it gives you a unified platform, right? Today, if you look at maintaining security, I'm sure you're interacting with several devices, IPS, IDS, bunch of things at your perimeter, multiple data centers, your licenses are bought in that perspective, right? And then you also have cloud. In cloud, you have different licensing scheme and things like that, right? One is consolidation. How can you make the security controls in a very consolidated and cost-effective way? Uh, in a short term, it may look like big amount, but in a longer run, it actually makes a lot more sense from ROI perspective if you're looking at unified platforms like cloud to provide you security. The other thing is obviously, uh, the continuous security posture or a consistent security posture, because now using the same unified platform, you are able to provide security across multiple data centers, applications in a single central place. Instead of worrying about how a firewall A will interact with a firewall B, which are in disjointed data centers that don't talk to each other, or maybe there is a firewall patch issue on site A, site B seems to be okay. So that kind of sort of things that becomes an issue on operational level, I think that really becomes quite easy with cloud adoption.
Okay, let's not make this a cloud class. We have another 5 minutes left. One of the panelists has indicated they have to leave at 5, which is very nice, and we will stick to the time. I was wondering who will get me back into my old mode of just finishing on time. So Asim, the last question is going to be for you, so that the panelists again has a wonderful insight. And this one is very important because this is the new era beyond cloud and stuff. So the question is, while banks pay a lot of attention, banks, security, financial services, I would say, pay a lot of attention to secure data on their premise. A new breed of attacks known as magicart or web skimming attacks are compromising third-party code, which could be the bank's trusted partner, and exfiltrating data from user browsers, including things like credit card details and user credentials, which means just picking up from users' thing. How much attention do you think banks are paying to protect the user data by focusing on browser security? So Asim, I leave this to you for the next 4 minutes. This is what you call as the closing. Then I have to close the thing because I think Sanjay has indicated he has to leave. Sanjay, you need to give me 5 more minutes of your time. Okay.
So thanks for that. I think this is, I'm sure most of us know about the changing landscape and threat. We talk about that a lot, day in and day out, being security practitioner. One of the things that has fallen off radar and chart, and rather many organizations don't have control on, is what's happening on the user browsers. And off late, this has become a trend, more so during COVID and pandemic, that a lot of attacks are now targeting user browsers to exfiltrate the data, which is actually your data as an organization. So you may be a bank, you may be an insurance company. It's your user which is going to their browser, trying to sign in or fill up a form, and their credentials get either stolen or their credit card details get taken from the browsers, right? So that is kind of a threat that has been more popular across last 3-4 years. Mesh card attacks have become very popular, but not much advancement has happened in terms of adoption by banks. I work with some of the banks in Australia, New Zealand, other part of Asia Pacific, which have now begin to understand this as a serious threat, because they see a lot of user privacy data laws coming into impact, right? Like CCPA, GDPR as an example. Many countries are coming up with their own privacy law, and the user data that gets breached is your organization's responsibility. Now, one thing that's really crucial in this piece is the trust factor that banks play, right? Everybody knows banks for the trust. I mean, that's the foundation on which the bank's business is built. And there is the user trust obviously placed in the bank as well. And there is a third party partner trust that you have with your trusted partners, vendors. It could be CDN providers, it could be your marketing analytics tools, it could be performance monitoring tools, anything else, right? Now, there are attacks like Meshcard that leverage a third party breach or third party trusted vendors that get compromised, and that's so malicious source codes fetch the user data from their browsers. A classical example of this is a security researcher that showed how they were able to use Google Analytics to exfiltrate the data from the user browsers. Now, I can't think of any organization that uses Google Analytics who would even think about something like that is possible using Google Analytics, right? This is just one example of how these sort of attacks can carry out. But I think while we pay a lot of attention towards APIs and web security and our perimeter security, there is a newer breed of attacks that we see, web skimming and Mishcard increasing, and there's a lot more focus that it needs in the industry right now, so that we can start focusing more on the browser level security for the users that will be interacting for your websites. That's all I had to say.
Thank you, Asim. And just let me wrap this out with 2 minutes extra with Sanjay's permission. Thank you all for your time. I think the goalpost is shifting. PLA is dead and gone. We need newer PLAs to come in and score goals. And I think the whole landscape is changing. The last point was very valid. And I think there's more to come. I think, every day I go to Twitter and in social media, I think the goalposts are changing. And I think one of our challenges is being on top of the curve. And that's going to kill all of us, okay, whether we use Gartner or anybody else. But at the end of it, I think as a CISOs or as security practitioners, all of us need to be on top and be ready to score the goal again and again. Because the day we miss, our organization goes down. Thank you all for your time. Excellent discussion. I appreciate all your presence in today's panel. And thank you, Banking Frontiers and Asim and Chinmay for giving us this opportunity to host this. Thank you very much.
Thank you.
Thank you.
Thanks, everyone.
Thank you.
Hi, everyone. Hope you're having a great time. Do not miss to visit our exhibit area. Our exhibit area offers an attendee an easily accessible and immersive way to view and experience the latest innovation in the BFSI sector. Do visit our exhibition stall and benchmark the latest innovations. Thank you.